company develops photovoltaic solar panels for homes and energy companies. The company will develop and sell their panels in addition to managing long-term power plants full of photovoltaic technology. The company has shipped over 30 gigawatts globally, which makes them one of the largest solar panel production companies in the world. By region, First Solar is a major solar panel manufacturer in the US, Europe, and in some other countries such as Australia. First Solar is very efficient at producing these solar panels, keeping emissions low with a low carbon output, in addition to continued innovation to produce more watts or electricity per panel as they are working on their Series 6 panel at the moment. First Solar competes in a very competitive industry, which we'll talk about in a moment after we talk about the demand and market of the solar industry. First Solar's market cap is $7.62 billion, making it a large cap stock, and the company was founded in 1999. If you look at the chart here, it shows where First Solar can be more dominant. This is the energy yield advantage of First Solar's PV technology versus CSI technology. First Solar thinks their technology is best compared to CSI technology, and it should perform better in a variety of locations. They think it'll perform better in the lower half of the US, but also in a variety of other countries, as noted by the red spots here. Now let's analyze the industry. To start, there has been significant market growth in the solar industry as we switch to using cleaner energy in the future. This chart only goes up to about 2018, but it gets the point across. There has been exponential growth in the output of solar panels as more utility companies are selling off their fossil fuel energy production assets and developing new and clean energy forms of production. I expect the industry to grow well over the next 10 years due to this shift, so I'm not concerned there. What I am concerned about is the fierce competition First Solar is facing. They are the only company interested in profiting off of this new switch to clean energy, and some of their primary competitors are solar panel manufacturers such as SunPower, SunTech, and SolarCity. SunPower already has a strong commercial business with big clients such as IKEA and Target. SunTech is another solar panel manufacturer, and SolarCity, owned by Tesla, has strength in the residential solar market. Unless First Solar has a more efficient solar panel, they are facing a lot of pricing competition, which is why these companies are essentially fighting for business through cost reduction. First Solar's price to earnings is a relatively fair 16.21, and a First Solar competitor, SunPower, trades at a price to earnings of 8.91. First Solar's PE is higher than SunPower's. However, SunPower's PE is very low relative to its past PEs, and thus I would consider First Solar to be still fair valued for that reason. The Dow PE currently is about 22, while First Solar trades at a lower PE. First Solar's PE is also fair compared to its past PEs, and that can help suggest that there is a fair valuation of the business on the stock market. And for price to book, we have the same situation. First Solar's PB is fair or low depending on how you look at it relative to other companies in this field. Currently, First Solar rocks a PB of 1.25, but compared to SunPower, which has a PB of 7.39, First Solar has a lower PB. However, SunPower used to trade at a PB near 1.25 or 1.5, and therefore this would suggest that First Solar has a fair PB at this time. I also want to note that this is a low PB relative to the S&P 500 PB of 4.82 currently, which is near the PB of the S&P 500 during the dot-com boom. Remember, lower is better. In terms of the intrinsic value, the company seems to offer a downside of 36%. After projecting the next 10 years of discounted cash flows from the past 10 years of cash flows, with a perpetual growth rate of 2.5% and a discount rate of 9%, the company has an intrinsic value of $44.91 per share, relative to a recent closing price of $70 per share. Now, there are multiple ways to calculate intrinsic value, and this is just one way, so please keep that in mind. I also want to note that the company's earnings as their free cash flow, EBIT, and net income appear to be generally flat over time despite volatility due to industry growth but sharp price competition. First Solar does not buy back its own stock. When a company buys back its own stock, the book value increases and the intrinsic value increases as there are less outstanding shares in the market. However, this should only happen when the company is believed to be undervalued and the money can otherwise be reinvested back into the company for growth, research, and acquisitions instead. In First Solar's case, the company is trying to reinvest in growth and innovation, not buying back its own stock, which makes sense for First Solar and other solar companies in this industry until they become more profitable. This also goes for dividends. The company currently doesn't pay any dividend, and like I mentioned earlier, this company could reinvest this money instead of paying a dividend, and that is what they seem to be doing at this time. So overall, what do we think about First Solar? First Solar appears to be fair valued at the time of recording, in our view, due to a relatively fair priced earnings and PEV. The intrinsic value is lower than the current trading value of the company's stock, but this is because of the company's low free cash flow, which is understandable for the time being. Over the long term, I expect the earnings of First Solar to grow steadily, since I expect strong growth in the solar industry. Lastly, this company offers no dividend and no stock buybacks, so be aware that this is likely more of a growth play and a riskier investment as such.